I've heard tell that there was some news yesterday. I don't know, it was something to do with Tesla. Some people are saying that it was the greatest earnings call ever. Others are saying that the earnings call was not so great. I don't know how Cern Basher felt about the call, but I know he's got a slide or two probably about the call. Would that be right? Yeah.
That is accurate. Yeah.
Okay.
How do I feel about the call? I mean, it's always a mixed bag, isn't it?
Yeah.
There's always some things that are a pleasant surprise, and there are always some things like, there's a missed opportunity there to talk about X, Y, or Z.
Yeah, Jeff
Um,
Jeff Lutz was particularly unhappy again, just with the what do you want to call? In fact, I think he had a conversation with you on some other program yesterday
yeah.
about his unhappiness with the kind of the mechanical aspect of it not being as I don't professional. Oh yeah, there we go again with the professional stuff. Yeah,
It's Tesla. We know and love Tesla for who they are, and
right.
they're not the most polished professional presenters on quarterly calls.
That's exactly right. Now, I've made claims, CERN, over the years that Elon Musk is one of the best communicators. In fact, I
Yep.
made it in the Elon Musk method that he's one of the best communicators ever. But I do believe, and I see this all the time, we'll see whether it works this week, that it takes 3 days for the regular investors to even understand what it was he said. But it was clear and concise, and you can go back and you look at it again, you go, oh my gosh, that's what he said.
Yeah, it was interesting. So I listened to the call live, and I was on Cyber Bulls last night, and then later I took a transcript
Hmm.
that was available to me,
Right.
and I went through and edited it because the transcripts usually there's all kinds of mistakes in them. And just that exercise of listening to the call again and going through line by line of everything that was said was very helpful.
Right.
It's amazing how many things you miss or you misunderstand the first time around.
100%, except not me. That's you.
That's me
That's everybody
and the
else.
vast majority of everybody else on the planet.
Anyway, all right. So do you want to get into the slides and we'll find out what you
Sure.
learned? Sure.
Well, thinking about the planet, and I'm thinking back to last week, we were talking about the Aurora Borealis,
Yes.
and I was wondering if there is such a thing as an Aurora Australis.
Yes. Yes.
And there is. I had forgotten,
Ah,
but yes, there is.
okay.
This is an image, I believe, excuse me, taken from New Zealand of the
Okay.
Milky Way with the Aurora Australis also in the background.
Yeah. 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 Is that what they call it? Aurora Australis?
Correct. Yep.
Okay. All right.
I remembered correctly. I just didn't
Yeah.
remember for sure that that was the case.
Right.
Yeah. So both poles of the Earth have this activity.
Okay. And that's quite a shot. That's quite an amazing shot. I think Brian, why don't you send that one over to Brian Wang? He might want to replace his really cool black background with this one because it's.
Yeah. No, it's pretty cool. I believe it was taken from New Zealand somewhere.
Okay.
The other thing that comes to mind, Randy, we spend all this time and effort looking for alien life. Why
Yeah.
don't we just look for the data centers in space?
Just look for the data centers in space.
Presumably, the aliens have already figured that out.
Yeah, I would think so. Yeah.
Maybe that's easier to find.
That must be.
Just an
I
idea.
got it. Okay. All right.
All right, usual disclaimer.
Uh-huh.
And notice there's no Cybertruck images today. We're going straight into it today.
Oh my gosh, no Cybertruck images at
But
all?
don't
Hmm.
worry, no, it's coming.
Oh, it's coming. Oh, okay, okay, okay.
It's just in the third half of the show, Randy.
I see the third half. Okay.
Well, first of all, when we were trying to get the slide deck yesterday, we were presented with this image.
Hmm.
It says, "I'm afraid I can't do that. Join Starman back at the homepage or visit support for help." So this popped up on my screen for a while, but eventually I was able to download the report. So here are a few highlights. We've seen this chart before. This is something I do. It looks at the components of revenue on a quarterly basis.
Right.
And if you look at this chart, you can sort of see that revenue's kind of stalled out
Hmm.
over the last, call it 3 years.
Right.
Now, it's interesting. The red bar this quarter, Q4, is, I believe, the 11th highest auto revenues without credits
Okay.
that Tesla's ever produced.
Okay.
11th highest. Okay, so
Okay.
there's 10 other quarters with higher numbers.
Right.
Okay. But if you look at the total, excuse me, the total revenue for the company, it was the sixth highest quarter.
Okay.
So that means that the other businesses are starting to carry more weight
Right.
right? They're growing, and as you can see, obviously the size of those bars
Hmm.
are growing over time.
Hmm.
And then in terms of gross profit, this was the fourth most profitable quarter in Tesla's history
Overall, okay.
overall,
Hmm.
right? Certainly not for autos. Just if you
Right,
just look at the red
right,
bars,
right.
but factoring in the contribution from energy and green, which is growing over time,
Hmm.
and
Hmm.
also the contribution from services and other.
Yeah. And quite
Now,
frankly, it looks like the two of the other top years were during the whole COVID nonsense. So it was artificial.
yep, yeah, that's right. So, not too bad given the situation.
Hmm. Hmm.
Okay. All right, let's look at margins. So gross profit margin for the entire company
Mm.
at 20.02. Now, they mentioned that the effect of tariffs in Q4 hurt them to the tune of about $500 million.
Right.
So the gross margin for the company would have been 22.2% if you back that out.
Mm.
So even better than what was shown here.
Right. They also said they had what do you want to call it? An FX loss as well, and a loss in their Bitcoin holdings.
Yeah, none of that helps. Those don't impact gross margin though.
Right, right. I understand.
More the bottom line, the green lines are at the bottom, the net margins. Yep. Yep. So there's all kinds of cross currents that can hit the company.
Hmm.
If we just focus on autos, the auto gross margin, excluding regulatory credits, the gray line with the orange dots, was 18.6%,
Okay. Yeah.
which is a significant uptick from where we've
Yeah.
been
Yeah.
last 4 quarters. And if you throw in the regulatory credits, you're at 21%.
Right.
So not too bad.
Very good.
And then if we look at the three business lines, energy is still the king of the heap at 28.6% margins.
Hmm.
Autos seems to be recovering nicely, and services and other at 8.8% is still contributing.
Right. And
Now,
I think that's really Elon's goal is 10% because most of that is energy, what do you call it? The service superchargers. Most of that is in
superchargers, used car
superchargers.
sales,
Right.
services,
Right.
maintenance, yep. But robotaxis in this business line.
Mm,
So I'm
that's
going to
right.
make a prediction here right now, Randy, that services and other is going to become Tesla's most profitable business line.
I'm going to make another prediction. They're going to separate it out in the
Yeah.
fourth quarter.
Yeah, they'll separate it out at some point. But hopefully not before it becomes the most profitable part of the business.
Right, right, right.
Actually, they probably will. Yeah. Speaking of profits, this chart shows the average selling price in blue. And you
Mm,
can see it's trended down with the exception
mhm.
is kind of the COVID period where it went up quite a bit.
Right.
And then in red, the cost to make a car.
Hmm.
And this quarter was the lowest it's ever been for Tesla, just over $34,000 to make a vehicle.
Hmm.
And the average selling price was 41,000. This backs out leases and things like that. So this is a pretty clean number.
So the $7,000 number, which has been pretty consistent except for during COVID.
Yeah, it's bumped around. This is you're talking about the profitability of selling
Yeah.
a car.
Yeah. Hmm.
Yeah, $7,000 this last quarter. It did get as low as 4,500
Hmm.
a year ago.
Hmm.
And it has been as high as 15,000 a couple of times.
Right. Right. Yes. Again.
Yeah. Yeah, this is abnormal here. This is when the vehicles were a whole lot more expensive,
Yeah.
right? So it will be interesting to see sort of where this stays, but certainly it's in a much better spot than where it was.
Right.
AJ updated this chart. The only thing that's changed on here is the line for Tesla. Tesla now has earned 21.7 billion of free cash flow over its history, and it is the only EV maker that has basically earned free cash flow.
Right.
Now, BYD is not on here. BYD has a bit more of a messy business. And also, I think I would challenge maybe some of BYD's accounting conventions.
Right. Hmm.
But from a pure EV maker standpoint, everybody else is racing to see who can lose the most amount of money. Rivian right now is winning that race.
Winning the race, yes, right.
Yeah. Not really a race that you want to win necessarily.
Yeah, yeah, yeah.
Tesla went through that too. They
Sure.
had a period where they lost, what was it? I guess almost $10 billion,
Hmm.
right? They went through that so-called valley of death. The others so far continue to wander in the valley of death.
Right.
They may not get out. Um, Hopefully this chart will be updated here in the next few weeks with all the other car companies, but most of them are not going to be turning the corner.
Probably true.
All right. New information in the report, Randy.
Okay.
Tesla for the first time shared active FSD subscriptions,
Yeah, yeah.
which, by the way, includes purchases and subscriptions. So
Right.
it's anybody that's purchased it is considered to have an active FSD subscription, I guess, forever or for the life of the vehicle. And then the monthly subscription on top of that. They did share data going back all the way to Q4 of 2021. And there were about 400,000 FSD subscriptions back then. And at the end of 2022 is about 500,000. At the end of 23, about 600,000. And at the end of 24, about 800,000. Again, they show these in terms of, this could be 800,000. It could also be 752,000 or something, right? They rounded up to
Right.
0.8.
Right.
So we lost a lot of granularity here in terms of, exactly how many this is. And the fact that you see here no change from one quarter to the next isn't correct. I'm pretty sure this is probably below 0.8 here and got rounded up.
Yeah, yeah.
And this
Yeah.
would have been above 0.8 and got rounded down.
Right, right.
Okay. But anyway, this is the best we've got, and that's fine for now. And then you can see a pretty nice increase in the last few quarters.
Right.
So what I did was say, okay, how is this going to impact auto margins,
Right.
gross margins, if you take out purchases? Because going forward, we're not going to have that. Now, this analysis assumes that when they sell FSD, they get to book all the revenue. I don't think that's entirely true. Okay. I think they're booking more than they ever used to, but I still think there's some reserve.
Right. I agree with you.
So auto gross margins would go from 18.6%. Using Q4's numbers, it would have been 16 if they didn't have FSD purchases.
Got it. Okay.
Okay. Now, it's interesting because in Q1 this year, there's going to be a rush of people that will buy it.
Right.
Right. So that will help auto gross margins, and it'll also probably help sales a little bit because in order to get FSD, you got to buy a car. Now, certainly some people that have existing vehicles who might purchase it. So that'll be a big chunk of it too.
Right.
So Q1 should be actually pretty good from a margin perspective for Tesla.
We also have Q1 possibly getting FSD approved in China and or Europe, not to mention other countries around the world. So while it probably would be toward the end of the quarter, going into the second quarter, there could be some benefit there as well.
Yeah. Now, this next chart's interesting. I took those numbers and I said, okay, what is the take rate? This is globally, right? So you're taking the active FSD subscriptions that Tesla shared with us, the previous bar chart, and we're comparing it to cumulative deliveries.
Right.
So back at the end of Q4 2021, that was 17%. And then it dipped down to 13.7 and then dipped down to 11. So what that means is that fewer and fewer people, as a percentage of those new vehicles that were being sold, were taking FSD.
Right.
Right. And then only in recent quarters if we've seen a consistent uptake there.
Right.
Okay. So they've successfully kind of turned this trend around. Another way to look at it is kind of the incremental take rate. And you can see that only 5 to 7% of new vehicles were taking FSD, which is shockingly low,
Right.
even during this period. But it's really improved the last 3 quarters. We're between 20 and 25% now.
Taking it, paying for it.
Yeah.
Wow.
Yeah. If we look at the incremental
Right.
change in the number of FSD subscriptions versus the incremental deliveries, 20 to 25% of the vehicles sold, right? People are taking FSD. Now, we also have to realize that there are some people that are taking FSD on an existing vehicle that they bought, maybe a year or two ago.
Right.
And they're choosing to pay up for it. So there's some of that going on, but I think probably for the most part, it would be a vehicle sale plus a purchase.
Okay.
Right.
And do these numbers include subscribers as purchasers?
No, well, these numbers, the active FSD subscriptions is purchases plus subscriptions,
Okay. Yeah.
right? Because if you purchase it, you're a
Right.
subscriber for
Right.
life.
Right. Right.
Yeah.
Okay.
So this, for me, was quite encouraging.
Yeah.
If 20 to 25% of vehicles that are sold, and again, we have lots of vehicles sold in Europe and China that
Right.
can't enjoy FSD.
Yeah.
So that's interesting to me that that's so high already.
Well, and it's not yet unsupervised. And you know, I keep repeating this, and so for those of you who heard me say it before, I apologize, but Elon has stated that he believes that going to unsupervised will be the number one catalyst for the
Yeah.
year, and it will dramatically increase car sales. So obviously, I think it would increase the uptake as well because those people would be basically buying it because somebody's shown them their unsupervised version and they've gone, oh yeah, I got to have that now.
It would be a good reason to buy a Tesla if you could use FSD unsupervised. That would
Right,
definitely be a demand driver
right.
for vehicles and for FSD for sure. Yeah.
Hmm. Hmm.
That could be one of the biggest surprises for this year.
Right.
We can now track Elon's progress towards his performance award.
Oh, interesting.
So he's at 44.5% of his 20 million Tesla vehicles delivered.
Okay, okay,
We're at 11% of the 10 million active FSD subscribers.
okay.
Got a ways to go there.
Yep, yep.
A million robotaxis in commercial operation. Well, we're 0.005% there.
Okay.
So there's some growth to come.
Yeah,
And 1 million bots delivered. As far as we know, we're at 0% there.
right, right.
So he's got some work to do, Randy.
He does.
Um, Speaking of FSD again, we've got until Valentine's Day to make a decision about whether or not you want to purchase FSD.
Right.
And I did a little break-even analysis here for folks.
Mm,
And I don't think you and I talked about this last week, so I'm sharing it
no,
here.
no.
Okay. So what I did here was basically look at two of the key variables. There's more than two, but the two key ones are what is the return on the money that you would invest in FSD? If you're going to spend $8,000,
Yeah.
what's the alternative?
Hmm.
Well, you could get zero return, it's just cash,
Right.
or you could put it in stock, Tesla stock, or some other stock, and
Hmm.
earn some return on investment. You pick which one feels right for you.
Right.
Okay. The second variable is what is the net monthly subscription price going forward?
Hmm.
Now, I say net because for some people, it might be offset by an insurance savings.
Right.
Okay. If you don't think you'll get any insurance savings, then you can just take out the net part and just look
Mhm.
at the FSD subscription. But if you think by getting FSD that you're going to save, $50 a month on insurance,
Mhm.
then maybe your 99 goes to 49 and you look at that row.
Right.
So I try to make this chart as helpful as possible given all the uncertainties.
Right. Right.
Let's say FSD stays at $99 and there's no insurance benefit
Hmm.
and you don't care about returning your $8,000 and it's going to take you 6.7 years to break even.
Okay.
So if you own your car for 8 years, then you're ahead of the game by buying FSD.
Okay. And so then you could get even more complicated. Is that what you were saying? That the additional complication would be you purchased the car on for over 6 years. You got, a 6-year loan, which means you didn't have the um, loss of the use of the money for except almost by the month, almost the same as it would be for the $100 a month, and yet at the same time you're going to pay more for it because you've
Yeah.
got the interest rate, unless you got it for zero interest. So it gets pretty complicated, huh?
There's a lot of factors. This complicates this very quickly. But just kind of a broad brush,
Yeah, I'm getting it. I get
you can
it.
see the more expensive FSD gets,
Yep.
the shorter the break-even period could be as low as 2 to 3 years if
Yeah.
FSD gets really expensive.
Yeah.
Okay, and the higher the return on the money you think you can get, that
Mm,
extends it out as well.
sure.
Okay,
Yeah.
so
So yeah, yeah. At the time, I just figured it when I bought the car. I just divided by the number of years. Um, uh, uh, I divided the $100 by the number of years, and at the
yeah,
time, I think it was more. Wasn't it originally $200?
I forget what it started out as.
Yeah,
It might have been,
yeah,
yeah,
I think so. Yeah,
yeah, and of course FSD has been higher as well.
right.
Um, Okay, so that's that. Hopefully that's helpful. Again, I wrote a post about this and I highlighted,
Hmm.
I think it was like 14 different complicating factors. So you can get needlessly complex with this if you want to, but here I tried to simplify it as much as I could.
Sure.
All right. I don't know if you know this, Randy, but they're planning on expanding Robotaxi this year.
Oh, really?
Yeah.
I heard that. I did hear that last year.
Well, the calendars tend to come and go.
Yeah.
That's only 2 weeks ago, Randy, that was said. Um,
Yeah, okay. So yes. So these are the places that were listed on the deck as
yeah.
far as where we're going to be expanding in the first half.
Yeah. So no great surprise with any one of these locations,
Hmm.
but they're all pretty good locations, in my mind, to
Yeah,
expand initially.
yeah,
Um, and it's just a question of how quickly.
exactly. Yeah, the one that's not on here, which is Los Angeles, which is a little bit surprising. Hmm.
Yeah, California, I guess, has a little bit of an issue right now with the safety driver
Still,
still.
okay.
Tesla doesn't have a pathway yet to remove them. In Texas, they do.
Hmm.
And I'd imagine it's also true in Arizona, Florida, and Nevada.
Right, right.
So this is going to be an exciting, I think,
Yeah, and
next few months.
I think three of these are in the top 15 largest cities. Dallas, Houston, and Phoenix, I think, are all in the top 15. I'm not
They're all
sure
pretty
about,
big.
yeah,
Yeah.
yeah.
Yep. And the cool thing about Las Vegas is a lot of international tourists there
Right.
from exposure. Same thing with Orlando,
Hmm.
Tampa,
Hmm.
Miami.
Hmm.
Yep. No, it's all good.
Yep, yep.
This was a post by Tesla AI. The lion does not concern himself with driving.
Hmm.
And then somebody added, a lion doesn't concern himself with the opinion of sheep, which is also a good quote. But then we have a response from the sheep, Randy.
Yes.
But I like driving. All right.
Yeah,
There was something that Elon spent some time on the call, and I could tell it pained him greatly, but the announcement of shutting down the S and X production
right,
in California.
right.
I immediately, we'll get to that in a second, but what's interesting here is that they're shutting it down to build a production line to build Optimus.
Yes.
And the plan is to make a line that has the capacity of 1 million bots. Now, I did some quick back of the napkin math on that. So the Fremont plant, as best I can tell, has a square footage of about 5.5 million.
Okay.
The S and the X account for 15% of the production capacity,
Okay.
100,000 vehicles a year. They're making 50.
Right.
And the 3 and the Y have a production capacity of about 550. So 15% for S and X, 85% for 3 and Y.
Right.
They're going to take this part of it, take it down, and replace it with Optimus.
Hmm. Hmm.
So 15% of 5.5 million square feet
Hmm.
is 825,000 square feet.
I don't know. Yeah. Yeah. Okay. Got
Okay.
it. Yeah.
So what's interesting is they're building an 8 million square foot factory in
Right.
Texas to make
Right.
bots. And what's interesting is that's about 10 times the square footage of this S and X line,
Which would be at 10 million. Yeah.
about 10 million capacity. So it seems to just on that rough back of the napkin math, check out in terms of capacity size.
Okay. So I'm going to stick with my number, and I'm going to say that they have way too much room and they're devoting way too much room in Fremont to that line. If you take the gross amount of of the the volume of
Yeah.
the Optimus, of the actual physical Optimus, and you figure out what that is in terms of the volume it would take up in a warehouse. Okay, then you take and you look at how big will the line be, and also they're going to make a lot of components. So the components could eat up a little space that I
Yeah.
may not have considered. But I felt they could do 1 million robots in 100,000 square feet. And so this would mean that the 8 million square foot could be 100 million.
Well, I hope that's correct. And I'm sure that the production line, as they move it as they scale it up
Right,
from Fremont to Texas, will become a whole lot more efficient as they learn
right,
how to make that more efficiently.
right.
Um, but this to me seemed like a pretty good trade-off,
Yeah. Yeah. Oh, yeah.
right?
This does.
And I did some quick math on this, and forgive me for the typo on this next page, but 1 million Optimus
Yeah.
at 100,000 a year in recurring revenue, which
Right.
I think is doable for the early
Yeah.
stage robots. Not in your house. Not many
Yeah.
people are going to pay $100,000 a year for a robot in their house. There'll be a few, but in factories.
Right.
And I still get a lot of pushback on this, but the math checks out, believe me.
I know. I
Okay,
know.
so that's annual revenue,
I
Randy,
confirm it. I confirm it.
yes, thank you. So that's annual revenue of 100 billion, which by the way is more than Tesla is currently making now,
Oh, it's a lot more.
right? Tesla's just under 100 billion. I think
Oh,
they
yeah.
did
Yeah. I'm
96
sorry. I'm
billion
sorry. Yes. The total. Yeah. Yeah.
total revenue.
Yeah.
So 1 million Optimus on the S and X line
Yes.
in Fremont,
Yes.
right? You're taking 15% of the productive capacity away from that factory from cars,
Yes.
dedicating it to this, doubles the revenue of the company.
Right.
Okay. Now, if Optimus, if you generate revenue of 50,000 a year, that's 50 billion. I wrote 50,000 billion, not 50 trillion. That's where
Okay.
my typo is, right here. I got carried away. I got excited about these numbers. It was also late at night. I was a little tired.
Yeah.
Um, so Tesla sells only 50,000 S and X, and at an ASP of 100,000, that's only 5 billion of revenue.
Right.
So if you're wondering about why Tesla's making this trade-off, here it is,
Right.
right?
Right.
And if you're looking for, a place to make humanoid robots, it's like, well, we have a factory right here. It's close to where our engineers are and the Optimus team. Let's build it here,
Right.
right? And you get a 10 to 20x uptake in revenue. And from a margin perspective, it's probably something like a 50x improvement,
Oh, yeah. Yeah.
right? It's a no-brainer, Randy, if
Right.
you look at it that way.
Well, yeah, I mean, because let's say the first year they're costing 25,000 a piece, but you're going to make 100,000, you're going to gross 100,000 the first year. I mean, that's massive profit. So, but the question is, and you and I 100% agree. My first number was 60,000. I thought 60,000 might be the number per year, might be what they would charge. But then as we did more and more of the math and really took into
Mhm.
consideration, more things, we all agreed around the 100,000 number, our $400,000 purchase.
Yeah.
And the question though is, I think Elon could do robotaxis right now at between $2 and $4 a mile. But
Hmm.
every evidence is pointing to the idea that he's going to do $1 a mile from the get-go. And to me, that's going to leave a lot of profit on the table, because he's trying, I think, to establish a price point. He's trying to establish, a model of what's going to be happening. I don't know I can't get inside his head totally, but we might end up with the same problem with Optimus, is that he's like, these are costing me 25,000 to build. I think 50,000 is enough. I don't know. It'd be interesting to see what he does.
Yeah, it's interesting with Robotaxi. If they underprice it, then they'll get, you know, they'll have problems in terms of vehicle availability,
Right. Right.
right? But it does severely hurt their competition,
Yeah.
right? And basically, then what you have is Waymo and Uber just dealing with the peak,
Yeah.
right? So their utilization goes way down.
Yeah.
Waymo, it would be a disaster.
Right.
Um, so it's interesting to see what pricing strategy they have. It'll work nicely if they can ramp aggressively. If that's the case, then you can come in at $1 a mile.
Yeah. Yeah. Yeah.
Right. But if you can't ramp aggressively, then there's really no point in doing that. You might as well just price it where the market is.
That's how I feel.
Yeah. Yeah. All right. Speaking of where the market is, let's look at energy. This should look familiar by now, Randy. We've looked at this now for the last few quarters.
Uh-huh.
Reported revenue for Tesla Energy in green. And you can see that we did over the last 12 months, just under 13 billion of revenue for Tesla Energy. Okay. And that was up from just over 10 billion a year ago. Okay. And the prior year were 6.
Hmm. Hmm.
So we've doubled in 2 years. But that's not it. Tesla Energy also has deferred revenue and unsatisfied performance obligations, the
Right.
sexy term.
Right.
And so I calculate a measure I call indicative revenue. I look at the change in those other metrics,
Hmm.
and I add it on to the reported revenue, and I get this indicative revenue, which has been higher. So indicative revenue of just over 16 billion in the last 12 months.
Mm-hmm.
These numbers are all very lumpy quarter to quarter,
Right.
but they show a very strong business.
Yeah. Yeah.
Okay. Here's the quarterly numbers, reported versus indicative.
Mm-hmm.
And generally, the yellow or the orange bars are higher than the green.
Mm-hmm. Mm-hmm.
Okay, and that's good. But sometimes there's some quarters like the last quarter, the third quarter, where reported actually was more than the indicative revenue in that quarter. So again, there's lumpiness all over the place here.
Yeah. Yeah.
Okay. Think of this as kind of like a coiled spring, though. When this is higher, when indicative revenue is higher than reported, you're
Yeah.
just building higher future revenues at some point.
Exactly. Yeah. Because it's going to
Okay.
get reported sometime.
Yeah. Here's the change in deferred revenue versus the unsatisfied performance obligations.
Mm-hmm.
And we had a few quarters here where both were going up. We had one quarter, third quarter last year, where the unsatisfied performance obligations actually went down. And this quarter, we had deferred revenue going down.
Yeah. Yeah.
Okay. So again, there's some movement in these different categories. And then here's the total. Right now, we've got about 12 billion in combination of deferred revenue
Mm.
and unsatisfied performance obligations. So it's about a year's worth of current revenue. Okay. So not too bad.
Yeah. Yeah. Yep.
It seems to have kind of plateaued here the last 4 quarters,
Right.
though.
Right.
So we'll see if Q1 is another sort of a breakout like we had last year.
And the plateau could be that the contracts in China are different than the contracts here.
Could be.
Yep.
Yep. Or maybe they're just structuring the contracts differently now anyway, for
Right.
some reason. Yeah.
Mhm.
And I think it's becoming a bit more of a competitive market, particularly in China.
Yeah.
So their pricing power may not be quite as good. And of course, this business is also impacted by tariffs here in the US.
Exactly. Yeah, we heard both of those in the reporting yesterday. I was a little surprised by the statement that the margins would be impacted by competition given the TAM, but I guess that if you're there's a certain part of the business right now which is the most obvious, which is the data centers and the utilities. And so I guess if those are your two primary markets, you might all be fighting over that same market.
Yeah.
Sometimes I think it would be better for them to look at some of these other markets, which might be able to be higher profits, but it's pretty easy to be persuaded to go after the big markets.
That's right. Yep. I thought Sam Chorus here had a nice comment. He says, bringing energy storage to the home is like indoor plumbing. Your toilet tank has storage. Your water heater is storage. You don't know it yet, but you're electrically living like you're in the 1930s. So that was a good way to put it.
Yeah.
All right. So here, and excuse the French here in this comment, Caleb Hammer says 4.3% year-over-year GDP growth in Q3 is kind of crazy. Didn't see that coming. And Mark Andreessen says it's time to grow. And Elon commented, you said double-digit growth is coming within 12 to 18 months.
Right.
Okay, this is back in December, by the way.
I know. Yeah. Yeah.
And he says if implied intelligence is proxy for economic growth, which it should be, triple-digit is possible in around 5 years.
Right.
Now, it took me a while to digest this statement. When I first heard this, I'm like, he's crazy. Triple digit, really? You're going to get 100% plus growth in
Yeah.
GDP?
Yeah.
And then I actually thought about it for more than a minute and came up with this.
Mm.
This is just humanoid robots. And so this is actually just a portion of this whole thing.
Mm-hmm. Mm-hmm.
Robotaxi is going to help. Just AI,
Sure.
not embodied also is a
Right.
big factor
Right.
of this.
Right.
Okay, let me walk you through this, Randy.
Mm-hmm.
If US GDP is currently at 31 trillion,
Mm-hmm.
okay, and you've got 340 million people in this country, then GDP per person is about 91,000. Now, we don't have 340 million workers.
No.
We could actually reduce this and look at GDP per worker,
Mm-hmm.
be a higher number. I chose to go with the lower number here.
Okay.
Okay. My kids certainly don't add $91,000 of GDP.
Right. Right.
Although who knows, maybe it's close with what we spend on schools and stuff.
Yeah. Yeah.
Anyway, so if you start introducing humanoid robots, initially, let's say they're half as productive as people.
Okay.
Okay. And then let's say you start with 50 million bots. You're adding 2.3 trillion to GDP with robots that are half as productive. Okay. So that's $6,700 per person being added to GDP by just 50 million robots.
Right.
Okay. Now, as you know, what's going to happen over time is the robots are going to get more capable and more productive. We're going to shift to the right on this chart. Okay. And even a robot working, let's say, at half the productivity of a human, well, it can work 3 shifts a day.
Right.
So you're between 1 and 2 right there.
Even 4 shifts.
Even 4 shifts. So let's look at the 2 column then, right? So really it's 9 trillion, right? You've just increased GDP by a third with 50 million robots, Randy. This is a drop in the bucket.
Yeah, yeah.
Okay. Look what happens then as you start scaling this up. And I went all the way out to 1 billion, right? There's 100 million robots and here's 1 billion robots. GDP growth at 2 times the productivity. That's 182 trillion in GDP growth on a base of 31. It's insane. And this is just, again, just humanoid robots.
Yeah.
Do we get to 1 billion robots in 5 years? I don't know.
Yeah.
Right now, it seems like a crazy number.
Yeah.
Right. And with all the talk about compute constraints and chip constraints and all this other stuff, maybe not. But still, it's significant even at lower numbers.
Yeah. Yeah. Oh, yeah. Very significant. Yes.
Right. And again, this is just humanoids, just robots. Right.
It doesn't count cybercabs and it doesn't count AI.
AI in general.
Yeah. Yeah. Or
there's a lot of work that's done that's not physical work.
A lot of flying drones will also be coming into play.
Yeah. So here, you know, at this 2 column, GDP per person is increasing by 500,000 on a base of 91.
Yeah.
So if you wonder where universal high income is coming from, here it is. Here it is.
Yeah.
Right. If you build it, we can have this.
Yeah. And, you know, Peter Diamandis and his crew now are talking about, instead of universal high income, they're talking about universal free services.
Yeah.
So that's another way to look at it, which is helpful, I think, to some people who are going, well, where's the high income going to come from? But if it's universal free services, we can already see, I always use the telephone as an example, which went from very expensive to free, you know, in 40 years, 30 years. And that was, you know, international as well, not just domestic. So we can see that it's possible for these kind of services to go to zero.
Yeah.
And I think we're going to see all of the services, all the utilities, all of that will go to zero. It'll be paid for by advertising or something, but it'll be zero. Yeah.
It's a bit like air. We don't pay for air right now.
Right. Information now.
And water is very close to free, or can be. And we're going to have that for more and more things over time.
Yeah.
Here's the GDP growth per person. You know, you're looking at 400%, 500%, 600% growth. This is in this 2 column. And of course, what's going to happen over time as the bots get more capable, they're going to move out on this productivity ratio. Right.
Yep. And
by the fact they can work 3 or 4 shifts a day and be more productive than a person, you get out to the 5x productivity of a human.
Right.
Okay. So you get to some crazy numbers there. Okay. So I got to thinking, Randy, you know, we have this US debt clock, which is kind of this countdown to doom.
Yeah.
Right. And now they've actually got some fun stuff on here. But for the most part, this national debt one over here in the top left is what we're looking at 38.6 trillion.
Right.
Right. And counts up, you know, by the second. But we should replace it, I think, with an amazing abundance countdown clock.
Oh, nice. I like it.
And
did you copyright this?
I should.
You should. You absolutely should.
Yeah. And I just put a target date here of April 20, 2042. I just
okay. All right.
Threw that data out there.
Yeah.
I'm sure there'd be some great debate about, you know, when we'll actually hit this, but
exactly.
This would be more fun, I think, than a doomsday clock of the national debt.
Yeah. You should copyright this for sure.
I need to get space in Times Square for this.
Well, yeah. Put it right next to theirs.
There you go.
Yeah.
Actually, in front, I think would be better.
So are you going to explain this, or because, you know, productivity creates massive profits, and massive profits re, increase revenue to the government. As you get increased revenue to the government, and probably the government also reducing their costs, you can wipe out the debt.
In
Uh,
theory, if the government doesn't get greedy and scrape it off of themselves, yes.
yeah, if they don't, yeah, if it doesn't become grift,
Yeah.
but basically, that's the other thing. I keep saying, I know you and I've had this conversation before, but I keep trying to figure out what we're going to do with all of this wealth. You can't go on two cruises at the same time. You can go on a cruise that you've never gone on, or you can go on cruises all year long, which some
Yeah.
people do.
Hmm.
But if you're on a cruise all year long, you are not in Yosemite all year long. If you're on a cruise all year long, you may not be spending as much time on your devices, looking at videos, et cetera, et cetera. There's a limited number of hours a day that you could be consuming services,
Hmm.
and there's a limited number of things that you want to have in your house, and a limited number of homes that you want to own, even if you might want, one extra one for the weekend or something. But at some point, everybody's upper middle class or lower upper class. And then there's like, okay, does everybody want a plane? I mean, I don't know.
Yeah, airspace might get a little crowded in that
Yeah,
situation.
right.
Um,
Or a
yeah, it's going
yacht.
to be interesting, isn't it?
Yeah.
It's a bit like water. Again, to go back to the example of water, do you hoard water
Yeah. Yeah.
because it's cheap? No, you just take what you need when you
Yeah.
need it.
Yeah. Yeah. So it's this a big question for me is the ult now I can imagine at an industrial level, if you will, that there's a fairly unlimited need for scientific discovery and the results of
Yeah,
those discoveries. So better health, you cure cancer. I think you talked about this a couple of times, but if you cure cancer, you're not going to need as many doctors.
that's right.
So that's going to hurt GDP.
Yes.
But if you cure cancer, you've got more productivity out of the people who are working.
Yeah.
And at the same time, you also make the quality of life better. So it might be again, the government might be the ones that are doing the curing of the cancer. So maybe we do send them more taxes if they're really good at it. But there's things like that, exploring the stars. People talk about that, exploring under the ocean, more extreme sports and extreme adventure could use up a lot of the productivity. But it's a long story. Maybe somebody should write a book about it.
Yeah. No, I think they should. I think that we're not going to have any trouble finding ways to deploy the freed up time and resources that we have.
All right.
We always have in human history. I think we'll continue to do so. I don't think it's going to be a problem at all.
Okay.
Right. If it happened overnight tomorrow, then there'd be an adjustment. It's
Yeah,
like, okay,
right.
now what am I going to do? But if it happens, reasonably gradually, let's just say
Right.
even over a 5-year period,
Yeah.
that's probably enough time for most people to adjust.
Okay. All right. Okay.
I think. Could be wrong. So Peter Diamandis says SpaceX has a larger valuation than all 6 U.S. defense companies combined. Wow. And Elon says this is because SpaceX is rebuilding an improved version of the entire internet in space, and they are not. And then he says NASA revenue this year is only about 5% of SpaceX's total revenue. So I put this together and basically showed that it's correct. SpaceX at a $600 billion valuation is greater than the 6 major defense companies.
Yeah.
Okay. At about 756 billion, I believe. And that assumes Boeing's defense business is 100 billion.
Okay.
If you included Boeing, the entire company, that would be slightly higher than 800 billion in total.
Okay.
But then I was also making the point that actually what Tesla's coming after is the telecom companies. That for this collection of companies here is about 1.5 trillion. If you include all of the world's telecom companies, you might be at 2.5 trillion.
Okay.
So there's another target. So
Right.
it's defense today and it's telecom tomorrow.
Yeah. Well, it's already telecom.
Yeah.
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 And this reminds me back in the day when they used to compare Tesla to all the automotive companies,
Right.
right? And like, how can Tesla be worth more than all the auto companies combined? I can't tell you how many times I saw that analysis from people that I thought were very smart.
Yes.
Um, and now we're seeing it again with SpaceX.
Yeah.
All right. Speaking of telecom and defense and maps, is that the transition? I don't know. I missed this at first, but Tesla Charging announced there are three winners of free supercharging.
Mm.
Actually, I think there were nine winners in total, but in this category, charging with the most unique superchargers. Our winners each charged at 400 plus different supercharger sites in 2025. Randy, it's only 365 days a year. They every day they were at a different one. So here's one here. This is California focused.
Okay.
This person hit like 502 unique chargers in California. I guess is it charging chargers or charging stations? I guess it's just chargers.
Chargers, yeah. Well, I don't
Must
know.
be just chargers. You go to the same station, a different
Or
charger, I guess.
yeah, yeah.
But 889 charging sessions, 35,848 miles. Okay. Here's another one. 582 chargers, 1,043 charging sessions, and they basically circumnavigated, North America.
Yeah.
almost 40,000 miles.
Yeah.
Okay. And then look at this one. 400 unique chargers, 1,273 charging sessions, 72,000 miles.
It's a lot of
It looks like a lot of that between Houston and Dallas and Austin and so on,
Yeah.
but also a lot in the Midwest and a trip or two California and up to Montana.
Mm-hmm. It's wild.
But pretty wild. So people are making pretty impressive use of the Supercharger network. Last week we did some maps, right? We looked at the place names of the United States and what that meant in the local language.
Yes, yes. Was that last week or anyway? Yeah.
Yep, it was.
Do it. Okay.
This week we're going to look at the most popular word used in online dating profiles by U.S. state. This is very telling. So if you are a woman and you want to find a man, you might want to move to the state where these words interest you. If you're not interested in oil, then Oklahoma and Texas and North Dakota are not your states. If you're interested in grilling, then Georgia and Alabama are where you want to be. If you're interested in casino, right, you want to be in Nevada. If you like hikes and kayak, the Northwest and Arizona. Surf is Hawaii. That makes sense. But then some other funny ones. Zoo in Missouri.
Wow. Yeah,
That's interesting.
St. Louis Zoo is like the second or third best zoo in the country. Yeah.
There you go.
Yeah.
Disney in Florida.
Yeah.
Hunting in Louisiana and Arkansas. NASCAR in Indiana. Shout out to Bradford. And so on. I thought these were quite funny.
Yeah.
I guess a lot of them make sense. But we've got North Carolina's mountains and South Carolina's downtown. I guess there's a clear distinction there between what people enjoy. Anyway, that's very helpful to know where you should position yourself in the country to make sure you're finding the right person.
Yes, that's
all right. Randy, my main problem is I'm uncertain how to deal with my uncertainty.
There you go.
All right.
I think we all fit that category.
Yep. This guy has 715,000 followers, and he says, I always wanted a yellow Lamborghini. Now I have a yellow Cybertruck. I think that's pretty close.
It's pretty close.
I agree. Here's another one. Cyber Bandit. Pretty sharp truck.
Yeah.
This is real. This is not AI.
Yeah.
And this is from Bearded Tesla. Huge congrats to Tesla Cowboy on his new look. So paid tribute to his first car, the 1977 Pontiac Trans Am. Cybertruck is a canvas, Randy. You can do whatever you want with it.
Yeah, that's 100%.
Okay. And then this guy, Mike P., says Cybertruck is more universally photogenic than any other car. You can say whatever you want to about the design, but every time I see a pic of the Cybertruck in nature, it always brings a vibe and matches its environment. I don't need one though, so I'm not going to get one. It just isn't a priority right now. I don't need it. I'm not on the website currently because I don't need it. And the Cybertruck account said, as a matter of fact, you do need me. And here's a one such picture where it just looks
Yeah,
beautiful in its environment.
yeah, yeah, yeah.
Uh, Randy, just to revisit this from last week, this was an image we shared of the Aurora Borealis
Yes,
in Canada at
yes.
Morant's Curve.
Mhm.
And I was telling you how special this place was to my father. Here's the same photo or similar photo from the same location during the day.
Oh, okay.
And again, with the train going around this curve
Yeah.
and the mountains in the background. It's a really special place. And that's from Vincent. So thank you for those photos. And then we'll close out again with the Aurora Australis
Ah,
in the
yes,
Milky Way.
yes. Nice
We
book.
open and close the show with
Nice book ending. Very nice
this
book ending.
bookend.
Yeah, yeah, yeah. All right. Well, so do you think Elon is happy again?
If solving some of the most challenging problems makes him happy, then yes.
No. I did contemplate this morning that he protested too much
Yeah.
about the chip factory and the solar factory.
They don't want
Uh,
to have to do it, Randy.
that's what he said.
Yeah.
That's what he said. Yeah. He says they don't want to have to do it. Certainly somebody else should do it instead of them. I think he was protesting. I think he doth protest too much. I think the entrepreneur in him is always looking for the next challenge, and that chip factory, the solar factory may not be the biggest challenge, but making the chip factory with also doing memory and packaging. I mean, he's taking on and probably doing it from first principles in a completely new way.
Yeah.
This would be, among the greater challenges that would potentially still now curing cancer. Maybe that'll be next. I don't know.
Well, the good news is he spent his Saturdays for the better part of maybe 6 months solving the chip problem.
Yeah.
So maybe he can reallocate his time over the next few Saturdays to these other issues. Uh, yeah, it's tough. It's if I'm Micron, if I'm TSMC and Samsung, I hear them,
Yeah.
but what are they going to do differently?
Yeah. Who did I talk to about this the other day? It's like I can come to you and I can say, look, I'll write the purchase order right now, and I can believe you. But you don't want one customer,
Yeah,
especially not at those levels, to have 25, 30, 35% of your business. It's just not smart business.
yeah,
And so I don't think that they would do that because I think everybody knows that rule. It's not like a hidden rule that you have to dig through your SBA program to find that old rule. Everybody knows that rule. I had a rule at my company, no company more than 10%. And we literally, my partner did most of the selling, and he came back from Target and said, "This is what we want to do at Target." And I said, "Well, you better sell a lot more somewhere else then,
yeah.
if you want, because Target's going to way above 10. We're not going to do that."
What happens though if you've got your best customer and because you're unwilling or unable to meet their needs, they do it themselves?
Yeah, well, it's a challenge, but it's like, again, if you among my customers, I had, oh, I don't know, Schwinn, which at one time was the number one most recognized logo in the world. I had Sears. Oh, Schwinn went bankrupt twice.
Yeah.
Sears went bankrupt. So you've got, Kmart went bankrupt. Yeah. So you take that risk. That's the other risk. Okay, now it's 10, 20, 30% of my business, and all of a sudden their sales drop in half or they go bankrupt and you're bankrupt. Yeah.
It's interesting, isn't it? Because you've got Tesla and probably what we think is going to be one of the most successful companies in the world,
Right.
probably by far.
Mhm.
The suppliers now can't work with them because of the risks that you just talked about,
Right. Exactly.
right? But what a lost opportunity because to ride another company's coattails
Yes. Yes.
It's interesting. It's really interesting. And I think this is going to be a Harvard Business School case study for a long time to come.
Well, and
Um,
you also mentioned the idea of they ask you to sell them more, and you don't want to do it because it'll be too high a percentage. But the other problem is the opposite. Is Tesla has gone out of their way. Elon has gone out of his way to say, I'm still going to buy for, even though I'm going to compete with you, or
yeah,
I'm going to make them for myself. I'm still going to buy tons and tons from you. Whereas again, if you talk about Sears, famously, started making products and took away the business of people. Now it's Amazon who famously starts manufacturing products when they get popular online. So yeah, so there's the opposite the opposite situation as well.
well, and it's great to say that now that you're going to buy everything that they can make, but
Right. Yes.
6 years from now,
Right.
that may change.
Good. Good. Good.
Right, particularly if you can make it for half the price, or make
Exactly.
something like in Tesla's case with the chips,
Yeah.
much more, uh, suitable for what purpose they need, rather
Yeah.
than a general purpose chip from NVIDIA.
So, okay, so I've said it a bunch of times. I've written an article years ago for Inc. magazine called From Virtual to Vertical, because I did the same thing as Elon did, almost identical. I was 100% virtual. I didn't have a factory. I didn't even have employees. And
Yeah,
within 2 years, we were vertical. We were basically buying the raw materials and spitting out printed bottles, on the other end. And I never wanted to do any of that.
yeah,
I wasn't even a man. I never had any experience in manufacturing at all. So I had no interest in doing any of that, but I couldn't get the quality, I couldn't get the delivery, I couldn't get the price. And so that's, I think, exactly what he's up against. If you're not able, in my case, it was matching the color sometimes of the bottle and the cap.
yeah.
And so no matter what I did to my cap maker, they wouldn't send me the right color so that it matched my bottles. You got to take it in-house. I mean, or you're out of business. Yeah. Yeah.
They were kept.
They were capped. They were just not very good. All right. Well, very interesting, CERN. I think we probably could have done 7 hours on the meeting yesterday. But you do have limited time. I understand you have an employment situation. You're actually, run a company or something.
Yeah, that does consume quite a bit of my time.
Yeah,
Yeah,
brilliant something, brilliant. I don't know, very,
brilliant
very
advice, Randy. Brilliant
brilliant.
advice. You just like to get me to say the name, don't you?
I do. I do. It's 100% right. Yeah. So brilliant advice. Follow him on X. Call him for brilliant advice if you have financial stuff that you're interested in knowing more about. CERN, as always, appreciate you coming on and appreciate your Aurora Australis.
Australis.
Australis. I have to add that to my vocabulary. I need to fit it in someplace to impress my friends.
You think it would Aurora Borealis should be Aurora Arcticus or something, but it's not. Yeah, it's all very confusing.
Lovely to have you on board. And to all of you out there, it's been great talking to you.
Thanks, Randy.